And the discussion, it's the season, it's Matters Finance Bill. And the question we're asking is whether the country's tax model is sustainable, fair, and supportive of economic growth. There are so many questions, debates, pushbacks as well. And what do we expect to see? I'm joined by two amazing persons. On my right, we have Edna, partner at PwC Kenya. Welcome, Edna.
Thank you very much, Maina, for having me here.
Excellent. And on my left, a commoner, Fredrick from Associate Director, Deloitte.
Thank you for having me.
Excellent. Thank you so much for coming. And, feel free as well to engage wherever you are. And I don't know what your thoughts are, but I want to start over, Edna, and I'll start with you by asking you about your overall sentiments or assessment of the Finance Bill 2026. And the question is the direction signaling Kenya's economy and tax policy? What are the concerns you're seeing and what are your thoughts so far?
Yeah, so thanks, Maina, for that question.
Yeah.
So when I look at the Finance Bill 2026, it actually signals strengthening of revenue collection. Mm-hmm. And this is through two broad measures.
Yeah.
One is broadening of the tax base. And the broadening of the tax base, we have seen that the amnesty is back.
Yeah.
The last amnesty covered liabilities up to 31st of December 2023. Mm-hmm. So this amnesty will be covering liabilities up to 31st of December 2025. Mm-hmm. And amnesties serve as a re-entry point for anybody who may have fallen off the tax system. Mm-hmm. After an amnesty is extended, then you strengthen tax compliance.
Okay.
Again, around broadening of the tax base, mm-hmm. we see that there's a narrowing of the tax incentives. Mm-hmm. So we'll be seeing that traditionally certain incentives, such as financial institutions, have been exempt from VAT.
Okay.
But now we are seeing a move away from this. Mm-hmm. So digital financial transactions will now be subject to VAT as a way of broadening of the tax base.
Yeah.
We're also seeing a lot of enforcement measures that the Revenue Authority will be given more powers to enforce. Okay. A good example is that if you have a dispute and it's yet to be settled past the Tax Appeals Tribunal, then the Revenue Authority can actually come and freeze your accounts to be able to recover 100% of the tax in dispute. So these are the broad measures that we are seeing. But for me, the key concern is around predictability.
Yeah.
We keep seeing the same proposals being recycled. Like that one I've just talked about, the powers of the Revenue Authority to collect tax that is in dispute. Yeah. This is the fifth time, Maina, that we are saying this.
Absolutely.
I'm hoping it's going to be rejected. We're also seeing a move where one Finance Act, like the Finance Act 2025, introduces certain measures, but now there's a proposal through the Finance Bill 2026 to do away with these measures. Okay. So that's a broad assessment of the Finance Bill 2026.
That's a broad perspective. I feel like it's a mixed bag. Kimodo, I know some have been said. I don't know whether it's something else. From your own assessment, what have you observed so far in this bill?
I do agree with Edna quite a bit. Yeah. When you look at the previous Finance Act that we have had, maybe they have also focused on increasing the tax rate. This one, like this one, so this one is not more into new taxes. Yeah. It's actually broadening the tax base that we already have. Although it's also trying to look at, to explore new territories. You might have had the conversation on taxation of the digital transaction from a VAT perspective, from a withholding tax and what have you. But what is more concerning is this idea of you have a change before it is 2 years, it's being withdrawn. Yeah. Like we had a good relief on bad debt, for example, where you can apply for refund once you have written off a debt within 2 years. That is a change that came sometime last year, but I think it came on 27th of December of 2024. Okay. But we are seeing it now being returned to where it was. Quite a number of changes that we can actually count. That is what is a bit more discouraging. And again, this bill also is trying to focus more on giving too much power to the commissioner. Actually, for the first time, we are seeing a prescription in the bill that now the commissioner can actually come and deem a certain percentage of the retained profits that you need to distribute.
That's a debate.
That's a debate.
I've seen a lot of people asking questions on
exactly
that.
The point. And there has been a lot of conversation around it in terms of what we have currently under the law. Okay. Like when we were discussing with the members of parliament, they were asking, when you look at the Income Tax Act at the moment, it actually gives the commissioner the discretion to declare 0 to 100%. So now the question was, so you are saying now you can start at 60. Is it bad or good? And for us, it is very clear. It is not a good law. Okay. Because what it does then is actually to deny the taxpayers and the commissioner the opportunity or the discretion to actually arrive at a certain rate, because the law is already then prescribing that you have to distribute not less than 60%.
Okay.
Yeah.
Lovely context there. And then let me come to you because, taxpayers are complaining. And one of the key questions is the balance in government getting its revenue versus the growing concerns around the cost of living and tax fatigue. Feels like these guys will never stop.
Yeah, Maina, that's a really critical question.
Yeah.
Because if you think about it, it's a question around balance.
Yeah.
The government requires the resources to repay the public debt for infrastructure and to also give social services to the citizens.
Yeah.
On the other hand, as you have rightfully said so, households and businesses are already feeling the pressure of rising costs.
Yeah.
And this was actually made worse recently through the external shock where the fuel prices went up considerably. So from a tax policy perspective, we need to strike a balance.
We need to.
What do we do to strike this balance? The first thing we need to do is to broaden the tax base. And when I talk about broadening the tax base, I'm not just talking about the informal sector. We also need to bake a bigger cake. And how do we do this?
Yeah.
We need to come up with policies that stimulate economic growth and development.
Yeah.
An example, if you offer incentives, say, to the manufacturing sector, this manufacturing sector will have employees. You'll be able to unlock tax from the employees. It will also have transactions with other businesses. So you'll also be able to unlock transactional taxes. And as an entity on its own, it will also be able to pay taxes. So this is one way of broadening the tax base.
Okay.
The other one that is very critical for me is encouraging voluntary compliance. In a modern tax system, you don't just work with enforcement. You actually have to work with voluntary compliance. If the taxpayers feel that the balance of power is shifting towards the taxman, then there is less confidence and it actually erodes the trust. And more significantly, the taxpayers should also see tangible benefits of the taxes that are being paid. So better infrastructure, better social services, etc. Predictability is also a key one. If the rules keep changing every now and then it adds a level of complexity when it comes to tax management. So taxpayers or the tax environment should be fairly predictable. And the National Tax Policy, which is a government document, had talked about laws being in place for at least 5 years. But we're not seeing this. And then finally, it's around safeguards. So taxpayers must have safeguards within the tax environment so that the balance is not tilting too much towards the revenue authority. It has to be balanced for the taxpayers to also be able to contribute towards that. So in my view, Maina, that's how to strike the balance.
Okay. And you're right, because I think somebody was saying that we are creating some police now to the people, and it no longer feels like we are voluntarily doing this work. I don't know, Kimoto, quick question, straightforward. Is Kenya at risk of, in fact, the question should be, are Kenyans generally overtaxed? That's the one question. Looking around, because, you come from a place where you can see the region nicely. Or is the bigger issue a crisis of trust in how the taxes are utilized, as Edna has put it?
I actually think that the bigger issue is how the taxes are utilized. You know,
so we wouldn't mind paying taxes if they would.
I don't think we would, and I think you might have had the CS giving some, some media briefing where you actually say that there are some taxpayers, specifically the Metumba sector, that voluntarily actually went and said we would want to pay tax, and this is how we would like it to be looked at. So I think to that extent, and there are so many people when you talk to people on a daily basis. So even most of the corporates, of course, they do comply quite a bit. But there's this question of, in terms of how are we spending the resources that we actually, we are correcting.
Okay.
And I think, as Edna put it, so let's not put so much power that is tilting towards the commissioner. Like if you look at this bill, there are quite a bit of things that are actually giving too much power to the commissioner that also makes compliance a bit difficult. So if you look at the bill, for example, there's a proposal there that the commissioner can actually issue assessments based on third-party data.
Okay.
That-party data could be anything, like it could be even a whistleblower. You can imagine a scenario where the commissioner comes and assesses you based on third-party data, and then the burden of proof is on you, to actually demonstrate that this tax is not due and payable. And we have seen quite a bit of those ones. But we hope that, increasing it. If you look at the bills that we have had over the years, I think the one that was trying to raise quite a bit of money was the finance bill of 2024 that actually had tried to infiltrate in so many new territories. You can remember motor vehicle circulation tax and what have you.
Yes.
The amount of money that I think it was seeking to raise was around 302 billion, if I'm not wrong. So unlike that one now, I think this one, they're projecting to collect around 135 billion.
Yeah.
So maybe the government is also taking cognizance of the fact that we can no longer continue taxing the same person. Employees have gotten the worst of it, especially.
Let me start this other question with you, so that Edna can take the other heavier one. So there's this whole thing of the implications of this bill to businesses. Simply put, what should businesses expect if this passes?
Yeah, quite a number of things. Of course, we hope that a few things will change before the bill is signed into law.
Yes.
Edna and myself and other stakeholders spent quite a bit of
That's what you're
time
pushing.
last week
Yes.
to ensure that some of the things are actually changed. But I think the positive one, which Edna actually did mention, is the one on tax amnesty.
Okay.
Very good one. So I think we need to take advantage of that as businesses.
Yeah.
But we're asking for something more. It's not that we are not grateful for what has been provided, but we're just asking ourselves, because the way it is currently worded is that you can only be able to take advantage of it if you pay all the principal taxes that are due for the period 31st December 2025 going back. You have to pay them by 31st of December of 2026. What that means is that taxpayers will have just like 6 months for them to be able to review their books, quantify the amount of money that they need to pay, and organize their cash flow as well. So the request then there is, can we give taxpayers a longer period. Like, for example, say by 30th of June of 2027. And there is no major implication because it is still within the financial year of the government. And I think the other one that business are also grappling with, and the question of tax amnesty, by the way, we have also been requesting that we reinstate the waiver of penalties and interest so that then also the compliant taxpayers don't feel like they are being shortchanged.
You're right.
So that doesn't also...
And I love that. So many businesses as well really need that breather. Because sometimes some of these interest and penalties, they end up paying some humongous amount.
But the last one mine on that. So if you talk to most of the taxpayers right now, they have debts that date back so many years back, 1998, 2011, and rightly so, because we used to have what we call manual returns. So you could give someone the return, and if they just add a zero on the tax liability, then you're done. So we have a lot of liabilities in there. So maybe the other thing that you would also be asking the members of parliament to consider is extending that amnesty also to principal tax liabilities, say for the period 2015 going backward. Because that is when we didn't have like iTax, a system that you have control of. So if those debts can be written off, it would really help, because taxpayers are really grappling with some of these things. When they go for tax compliance certificate, they are not able to get them in good time just because there are some liabilities that exist on paper. And doesn't help because our laws also only require the taxpayers to retain documents for 5 years. So it is then a question of, it's a catch-22 of some sort. Someone is saying you owe us this amount. The only way you can demonstrate is by giving documentation. You don't have it. So it is high time we take the bold move and just waive those principal taxes as well.
I hear you. And we really certainly hope they do that. Kimoda, I want to ask you a question. Kimoda and I go to the same church. So I don't know how you'll be telling the authority that you pay tithe and how they'll be able to see all these things. Because when I listen to Edna and the kind of transactions that they will be checking on, the data they will be collecting, there are some definitely they can collect. If I took a border because of the traffic on the road, they don't have visibility of what I used. What are we going to do about this? Is this burdening some people? Because as you said again, the voluntary way is no longer looking that way with that data. It looks like there's a police behind me with a gun.
So we need to really think about it and support the businesses, so then the business can also support the government.
I had the commissioner very happy about some of the revenues they collected. But, I also had some people who were complaining. There was this shuru. I don't know whether you saw that. Shuru made some people panic because all of a sudden, it just assumed nobody spends anything and you have all these taxes to pay and the opportunities. And I know you've already spoken about the amnesties and all that. I don't know whether there's any other. I have to also be optimistic a bit. But you could also touch on the ordinary taxpayers and even the businesses, especially the informal sector. What you have observed that they could probably see as an opportunity.
Yeah, I think the major opportunity is actually the amnesty, yeah? Because it gives taxpayers the opportunity to clean up their records.
Yeah.
And this comes in two ways. One, maybe we already had liabilities in your iTax system. That's a tax filing system.
Yeah.
This is an opportunity for you to clear.
Okay.
The second one is from a dispute perspective. So if you've had a long-standing dispute and you're able to agree with the Revenue Authority through the alternative dispute resolution framework, then you can pay the principal amount and the penalties and the interest will be waived.
Okay.
So to me, this is the most significant opportunity that there is.
Okay.
But looking at it, the implications also for ordinary Kenyans, we've talked about the digital transaction taxes. Kimotho has talked about the card transactions.
You're right.
So the challenge we have in Africa is that our withholding tax rates are very high. 20% withholding tax is very high.
Yeah.
So if you're supposed to gross up this, it means that the cost will go up by 25%. So we might actually think that we are taxing the non-resident, but we are the ones bearing the cost.
You're right.
Yeah. So I recently had a card transaction, where I was told, you know what, if you're using your card, you have to gross up by this amount.
Whoa.
So we are likely to see that happening a lot.
Yeah.
So that's something that probably needs to be looked at just to make sure that we are still maintaining the financial inclusion agenda.
Yeah.
And one of the ways of broadening the tax base minor is to ensure you go cashless.
Yeah.
Because then you have visibility of all the transactions. But if then you introduce a cash economy, it becomes very difficult.
You have to trace.
Yeah. And I talked about predictability.
Yes.
Yeah, so it's also very good for the businesses, both in the informal sector and the formal sector, to familiarize themselves with what has changed.
Okay.
Because the tax laws are changing very quickly. You might be relying on last year's tax law, and things have changed. So a lot of taxpayer education is also required from the Revenue Authority to make sure that there is ongoing compliance for businesses.
Okay. I have a final question for each of you, and I think, let me start with you, Edna. And for me, the question will be, when you look at what we are introducing right now, and if this model remains unchanged for the next 5 years or so, what does the economy look like to you? Would it be positive, or do we need to at least implement some of the things we're suggesting? In other words, what is your final word to the commissioner if he's watching and the parliamentarians are about to sign this?
Yeah, so my final word is,
Yes.
let's take predictability as a tool for revenue mobilization. And why do I say this?
I love that.
Minor, if you keep changing the tax rules, think of that investor who is holding back the investment. Maybe they want to invest in new technology to expand their operations or to make hiring decisions. They can't. And when they scale back or hold back on the investment decisions, we're actually shrinking the tax base. We have quite a number of documents that the government has put there. One of them is a national tax policy, which I alluded to earlier, which says that our tax law should be in place for at least 5 years.
5 years.
Let's honor that.
Yes.
Yeah.
We've not
Then the
done-
other thing, the other document that we have in the public domain is a medium-term revenue strategy.
Okay.
Which also gave commitments from government of what to implement. So some of these commitments were to do with rate cuts. The corporate income tax rate was to come down to 25%. The VAT rate was to come down to 14%. Pay as you earn was also to be reviewed to make sure that the bands are wide enough and the top rate of 35% brought down to 30%. So it's good to honor these kind of commitments.
I love it.
And as we honor the commitments, we are then encouraging investment into the economy, and we stimulate economic growth and thereby expand our tax base.
So you believe, like what KBA is pushing and the private sector, that if pay was actually lowered, we would stimulate the economy more?
Yes, Minor, and this is why. Because if you have higher disposable income, a rational being has two choices. One, it would be to consume, and when you consume, you have consumption taxes. Two, it would be to save. And when you save, there are also taxes that come into the fore. So I think increasing of disposable incomes will actually stimulate economic development. But then, having said that, we are also aware that the government is in a very tight fiscal space. So it's a question of, should this be done now or later? But I think it should be done.
The president said it's going to happen. So we're waiting to see the implementation. Kimotho, I want you to give your final words on this, but also touch on the concern about the proposals around undeclared or retained dividends. Tell us whether the government is being too intrusive, or what are your thoughts on that?
Yeah, thanks, Maina. Maybe before I come to that, so I think we're at a level where we need to encourage the government to pay fidelity to the policy documents that we have put out there.
this tax policy and medium.
Yeah, so Edna and myself and other stakeholders actually spent a lot of time on the medium-term revenue strategy and the national tax policy.
Yeah.
We went to Parliament, we went to National Treasury, seeing how that document should look like. Now, we are now coming to the final year of the medium-term revenue strategy. And as Edna has put it, I don't think we have implemented a lot from that, especially what is taking away from the government. I think we seem to be cherry-picking the administrative things that are in that particular document, and we leave out the things that would have a real impact, on the taxpayers. Things like reduction of the, the tax rates, be it pay-as-you-earn, be it corporate income tax. Because then, if we don't pay fidelity to those particular documents, investors coming from outside will be wondering, because we keep referencing those documents.
You're right.
So it's the policy, the government's policy that they'll reduce the CIT rate, they'll do ABCD. But then if you're not implementing any of those, then there's a big problem. Yeah. And I hope we can do that, in the coming days. Or if we have another medium-term revenue strategy, let's not give very big commitments that make everyone excited, but we are not implementing them. Yeah. But having said that, let me now come back to the question on declaration of the commissioner being empowered to, to deem dividend distribution. Yeah. So the law, current as it is, actually gives the commissioner that power. Okay. So the only thing is that the commissioner can declare 1% all the way to 99.99% or 100%. But the very important conversation happens, because remember there's a deeming provision. So what then happens is that there's a conversation between the taxpayer and the commissioner. Yeah. Why didn't you declare dividends? The taxpayer will say 1 or 2, 3 reasons. If the commissioner is convinced, they will not force you to declare dividends. Yeah. Or they'll not deem that you have distributed dividends. But they could also be 40% convinced. So they can then do 40%. They can do 10%. But what the bill is seeking to do is to ensure that it gives the commissioner a head start. Because the commissioner now starts at 60%, because the law says it is at least 60%, which is not the right thing to do, because then you are removing that role of the board in terms of declaring dividends and what have you from them. Yeah. So we hope that is one of the laws that will actually be. The bill will seek to ensure that law does not pass, because it is not good law at all. Okay. And I think the last thing, and I think this is an opportunity for the National Assembly as they consider this particular bill. Yeah. I think we should throw away any change that is coming too soon. Like if we had things that were there in the Finance Act of 2025 and now they are being reversed, if there is no good reason, I think there should be a clear message from the National Assembly now that we don't want to see this happening year after year, because then predictability becomes very, very difficult to achieve. Yeah. So I think the Parliament has an opportunity to do that, to send that very clear message that we had these 5 proposals last year. We are now bringing them back. Why? Reject them. Yeah.
I love that. Reject them. Thank you so much for your time. I want to appreciate my guest, Edna. Thank you so much for being here.
Most welcome.
Thank you so much, Fredrick, as well, for being right here.
Thank you.
And I think the conversation must be spoken. The worst thing is to keep quiet and let things go by. I think my takeout is that let's just adhere to what we have agreed on. If there's a tax policy that has been put in place, let's stick to that so we're able to be predictable, as Edna has put it. Thank you so much for your time. I'll leave you now with the markets. And there goes the bell. Asante sana.